Good morning, ladies and gentlemen. Apple drags the entire market down yesterday single-handedly after being downgraded $1. So is this an overreaction by everyone in the market? Is everyone just taking profits? Is it catalyzed because of passive investing? And we're going to dive into what the analysts' history is with this company, what they thought of this company in the past. And I think the Yahoo Finance commentator sums it up in a very, very eloquent way. Apple stock down 3.6% as Barclays says iPhone weakness still persistent. So I really want you guys to listen to this piece.
I actually just talked to Tim Long a few weeks ago, and I asked him about Apple, and he has long had a bearish view on Apple and a lot of the demand that we are seeing.
So an analyst has a long bearish view on Apple and basically wants to just harp on their opinion. Well, let's talk about what happened if you harped on your opinion. Well, standardly, you would miss out on a 37% rally, and then a subsequent following that, if you bought the dip, another 18%. So you could have made 57%, or even if you hypothetically kept buying every single dip, you could have made 54%. And iPhone demand weakness was this entire region here. Now, I'm not an Apple fanboy, guys. I don't like Apple products. I do not like the company as a whole for their products. Do I think they're absolute geniuses in extracting money from their customers? Yes, they are absolute geniuses. And people really don't care about their crappy earnings. Like, we covered their last two earnings. They weren't that great. But the market disagrees with what I thought of it. The market agreed that the prices were 20% more off the last earnings when I was saying the earnings were absolute crap. So guess what? This could be another case of one of these things where we need to see what the stock is going to do. And coincidentally, this is where we get into a little bit of analysis. Apple, because it is part of the S&P, is going to retrace roughly 50% of the way. That's a standard thing for the S&P. If we look to the low of the day, $183.89, the Fibonacci retracement comes in at $183.76, missing it by 20 cents. So, rounding error there. But to me, I'm going to say that we successfully retraced 50% and could be possibly setting up an A to B pattern being bullish on Apple. So if we take that more conservative approach for that setup, let's even take it from the wick over here down to the retracement here, projecting. Now we have to confirm by trading above the $200 price point for Apple, basically forming new all-time high, which could easily take it to 210. So that approximate from the bottom here would be a 14% rally on Apple. That doesn't necessarily have to happen today. So we have to also look at some other indicators I will share with you in a moment, but I really want to go back to the guy downgraded it at $1. His price target was 161. So let's snap a line and let's go back to 2023. So this analyst basically has a price target for Apple of 160. So let's see. In May, we blew past that price target and they were continuously wrong the rest of the year. So I'm not trying to harp on this, guys, but I have been bearish on Apple. I'm one of those people. I'm basically playing Apple bullish right now. And yes, I have a bias just because I have a position on. Of course, you're going to be biased in wanting your position. And I did add to that position today as Apple dropped to try to recuperate some of that value, because a 4.5% drop in one of the biggest company in the world is a little overblown when it's not on earnings. Just, sell the rumor, buy the news type event. So we have to see how this all plays out. I think personally, the shorts are getting ahead of themselves, and there's going to be several pieces of evidence I'm going to lay out why I think the stock is going to be bullish. Now, where do I know that I'm wrong? You cross 185 again, I'm out. Like, as simple as I'm going to make it. Cross 185, there's basically no support in that region, and well, that's where I'm going to get out. That's my strategy. So today could have been overblown. We have to see tomorrow how the whole game plays out. Now, why am I saying that we're basically bullish or bearish? Well, if we look at the 1 day, we see that we have, if we make this larger for you guys, we have a buy signal on Luxalgo. Link down in the description below if you guys want to check them out. As always, not sponsored by them. I just think their product is really cool. We have a huge amount of support ranging from $169 to $155. So if we ever come back down there, we're probably going to get a buying bonanza like no tomorrow. It's around the price targeting area here. However, our trend is bearish. So we could get a reversal. We have a change of character today. So all these things combined is basically telling me, okay, the stock could be reversing. I'm not completely absurd to that, but do I believe that the reversal is catalyzed properly? No. I think if we just had standard price action where the volume was allowed to fill this area in, because now we have a gap, that gap can initiate a massive short squeeze and we could easily blow past 200 with that. Now we're setting up the catalyst, because going into this, we had net speculative positions shorting 192,000 positions, tripling down essentially. And now we have to see how that all plays out. And really, it could be a massive short squeeze. If we go to the 5-minute of the day, as we see here, is when we basically kind of tapped around at 185 and then squeezed up through the day. Notice the largest volume on the day being towards the end of the day where we had that nice rally. If we go to the 1 hour mark as well, the second largest candle on the day for volume, except the open with the overblown catalyzed reaction where everyone's blowing their stop losses, we see that we are basically green there. So the 4 hour even says it better. Hammer candle on the 4 hour here with a buy signal in the reversal zone. This is basically a short-term bullish setup for me, and I'm going to be playing that rotation to the upside with a 185 basically being the line in the sand that if Apple crosses, I'm going to get out and basically say, hey, I'm going to look at something different. I'll take the loss, but however, I have different positions out there, so I don't necessarily mind taking the loss on there. However, I have my line in the sand. So for you as a buyer or a seller, would this be an area where you want to basically buy or sell? Well, we have to really see the next price action over the subsequent days. For me, if I look at the 4 hour, I see RSI plummeting to 17. That's extremely oversold. A reversal indicator on the oscillation. So I'm like, okay, well, we're adding more things of a possible reversal here. We go to the daily. We don't have that yet, but RSI is below 30. So we are in oversold territory with a reversal signal here. Well, let me take a look at the broader market to see what it's telling me. Well, we got a doji hangman, inverted hangman style candle here on the S&P and the NASDAQ. Well, that's a little more bearish candle, especially because you had Netflix selling off today. That was pretty massive, down 3.78%. Microsoft down 1.37%. Google was down about 1%, Meta 2%, AVGO, NVIDIA all more than 2%, AMD down 6%. So that was just a massive move on AMD. I think AMD is coming back down to that 130 region just because it was pretty overstretched going into this season. However, I think Apple's reaction as a whole right now is a bit overblown. We will find out today when Apple opens up if we get a bullish catalyst on the way up. I would not be surprised if one of those analysts basically reiterate their hold rating or buy rating on Apple, because I think this person is playing their ego more than they are playing the actual stock. Apple has continued to make higher highs. If we go to the weekly real quick here, we can see that it's just basically higher highs, and higher highs. So 1, 2, 3, 4, 5, 6, 7 weeks of higher highs. Now we got a contraction pullback here, and then we could head higher, similarly how we did back here, and that would be a pretty bullish move on the company. And that 210, 220 definitely puts us up into the weekly target. So we're gonna see how that all plays out in the long run for Apple. And as always, I will keep you guys updated on that. Now quickly jumping over to the portfolio real quick for Theta. Apple, of course, reaming me like no tomorrow. I actually had to close Intel for a slight loss of $28. That one we'll talk about in just a second. However, all the other positions, kind of a mixed day, especially with that big volatility spike. I want to see how everything levels out. I'm going to be watching Netflix pretty close because it just went red. However, it has a decent amount of Theta still on it. And it's not necessarily like one of those moves that I preferably like, because the stock did move down significantly. If we jump over to the chart right here for Netflix, as we can see here on the day, pretty massive move. However, wicking tail towards the bottom, and we have support around that 450 to 444 area where it is the width of my strike. So I may hold on, may roll it. I don't know if I really want to, but I have to see how this all plays out. We're still holding pretty strong on the trend. However, volume is bearish. So again, we're in that beginning of the month. We do have some catalyst for us next week, which I'm going to talk about real quick here. And that is simply, we have a Fed speaker that's kind of in the middle neutral, but we have seen these Fed speakers come out and be more bullish as a whole. ISM manufacturing PMI, job openings, FOMC minutes, that's going to be a pretty big one, especially those minutes. They're expected to be pretty bullish. So we're going to see what the participants were saying. The Fed indicate cuts. Do they feel like rate cuts are done? All that more will be packed in there. And then Thursday, we have ADP non-farm payroll, additional jobless claims, crude oil inventories, and global services PMI. So that's going to be a pretty big one. And then Friday, the big kahuna, which is payrolls. So payrolls is looking to come in basically slight shrinkage in payrolls. However, nothing too crazy going in, not a big massive contraction. And then year over year income is supposed to shrink a little bit. Looking at this, I don't see anything that's going to be like standing out that's hugely going to move the market in the way today moved. I think, again, this is just my opinion. It's not a severe fact. I'm going to let the chart prove that for me tomorrow. Is if Apple starts rotating higher, I definitely could see a short squeeze initiate, just because where do you think all their shorts stop losses are? Right here at 188 roughly. That's where their stops are going to be sitting at. And I'm guessing market makers are like, oh, we can blow out more shorts. This is what I was talking about in the weekend deep dive video, guys. Link down in the description below and at the end of the video as well. So you guys can see that we're basically a failed weekly breakdown. Essentially for me, I could see rotation because you broke down and pushed back up with a swinging top candle, kind of rejected off the high. So you're really in an indecision point right now that could be decided very easily tomorrow. And we have large bullish volumes. So this can definitely support a larger move on the indexes tomorrow. Bearish volume on NASDAQ, of course, but we have to see how this all plays out. This could easily be a pullback, and pushing to those new all-time highs would be the way, in my opinion, the S&P could do it. This is setting up that you could easily push to new all-time highs here because you have that short squeeze catalyst possibly out there. However, we have to see how everything plays out. And the last but not least, I'll just throw on the dollar that I noticed. Like I told you guys, dollar strong move today. Markets were down, falling wedge. We're going to have to pay attention to this. But what gave me confidence in the trade today, and thank you guys so much for watching towards the end of the video. Really appreciate you guys. And as always, throw a like down on the video, throw a comment. We want to hear your thoughts of what you guys think about this video. So make sure you guys are also subscribed to the channel. As always, bell notifications on so you guys don't miss a video. So looking at this, we see that VIX came to an area that we previously had, which was around that 14 area. Completely sold off. People were not fearful today. As we can see, fear and greed holding strong. So people are still greedy. We're not seeing signs of a retracement. One of the things to watch out for, and you'll see this in the news as well, is they're saying yield surge today. I'm like, that's not too much. Like, you're not making a higher high, so I honestly don't care. You got rejected off the higher high, the 5-year, pushed up, failed to hold higher high, 10 years, similar story. All of these failed to hold higher highs. However, reverse repo did tick down significantly to 704 billion from $1 trillion. So $30 billion basically sucking out of this to push liquidity into the market to maybe quash this. So we have to see how yields do right now. They're basically kind of just pushing up at the time of recording this video. But looking at it as a whole, I do expect yields to maybe kind of go sideways here, just because this is where we're targeting for the federal funds rate at the end of the year. The cuts really haven't been repriced. If we jump over to them real quick, this was at 80, now is at 68. So literally for me, they repriced by 2%. That's just standard swing. If we really go to December, we can see that they're still expecting at least 5 cuts. So looking at this, I'm not too worried about like this being like the pivoting point for me. I'd be looking more on the bullish side than I would be on the bearish side going into Q1, Q2. Until the yield curve shows some degradation, until these earnings come out and basically disappoint people, I think that bullish momentum could be sustained unless we see other data out there to prove otherwise. So thank you guys so much for watching. This will be the last video for me this week, and following week I'll see you guys in the live stream on Friday the 12th with the JP Morgan, Bank of America, Citi, and Wells Fargo's earning. I'm taking a vacation, so Fatal will be covering all the videos. However, I will answer any of your comments that you guys throw on the video. So make sure you guys like, comment, and subscribe. And thank you so much for watching. Hope you have a wonderful day, and make sure you guys stay bullish.